Okay, this video actually begins chapter 15 in our class, which is job order costing and analysis. And really what we're doing is it's an extension of the chapter 14. Now in chapter 14, we talked about, let me go to a sheet of paper. We talked about those businesses that are actually like manufacturers that have a factory that is producing a product of some kind and ultimately transferring it over to the showroom to be sold. Now, like any other business, we're going to incur expenses to produce that product and to sell it. So recall from back in chapter 14, we said that we've got 3 different levels of inventory. Raw materials, work in process, and then when the product is finished, it transfers over here in the showroom to where we put it on the shelf to be for sale. Finished goods. So the costs all really start in raw materials, and then they travel across and then ultimately get sold. We're going to have our sales. Cost of goods sold. There we go. So that's ultimately what we're trying to establish an accounting system that will capture these costs, and these costs are all being accumulated in the work in process account. So the product costs are made up of direct materials, direct labor, and factory overhead. Again, this is just a review of chapter 14, and this is where the costs are all being accumulated in the work in process. And now physically, the raw materials inventory is in the factory somewhere, and physically the work in process is in the factory. That's where all the hammering and sawing and polishing and calibrating and measuring, everything's going on. And the finished goods is sitting over here on the shelf in the showroom. So these represent inventory accounts. These represent assets to me, just different phases of the inventory. They are my assets. So as every asset, they have a debit balance. And the costs are flowing through, sitting on the shelf, and then when they get sold, they get transferred to cost of goods sold to be matched up with whatever I sold them for. And remember, what's coming out of work in process to the finished goods, this is cost of goods manufactured. Cost of goods manufactured, and this is the cost of the goods sold. So everything's flowing through. Every cost of the factory is going to end up in cost of goods sold. And that's what we talked about in chapter 14. We actually didn't see it in the form of T accounts, but I think it's easier to understand if we can actually visualize it in T accounts. And that's about half of chapter 15 is taking the concepts that we learned in chapter 14 and putting it into T accounts. So we're already about a third of the way through chapter 15. So let's go back to the text. We're going to talk about various cost accounting systems. In this chapter, we're going to talk about the difference between job order costing and process costing. And more specifically, we're going to talk about job costing. We'll dive more into tracking raw material and labor costs and how we're going to charge overhead costs to production as well. So let's get started. Let's see where we are here. Blow this up a little bit. Learning objectives. A little bit of fluff there. Okay, now there are 2 types of manufacturing systems. There's job order costing, job order system, and process order system. And it's fairly simple. The difference is fairly easy to understand. if we are a manufacturer, if we are producing specific jobs which actually have a start and a finish, for example, like we're a construction company and we build houses. Well, each job is a job separate and apart from other jobs. We may have some small jobs, we may have some large jobs, but we do have specific jobs separate from every other job. A pool company is they have jobs that come in. Even a mechanic will have jobs, or like an auto body shop. They have specific jobs. Customers will come in. Some of them need just some minor repairs. Some of them might need some major repairs. But what I'm actually doing in my manufacturing facility here actually has, each job has a beginning and an end. Movie companies, to manufacture or to produce a movie, sometimes we hear about how many millions of dollars it took to manufacture to produce a movie, and they compare that with the ticket sales. So many manufacturing environments are job costing, because we are going to cost out the jobs that we actually perform. Now compare that and contrast that with process costing, where we are producing like gasoline. Maybe we're producing gasoline. So we have oil coming in one end of our manufacturing facility, and on the other end is we're getting gasoline and maybe a couple other products, kerosene or something. But there's really no start and finish to that job. We turned on the production, the pipeline 15 years ago, and we've never turned it off. There's no specific jobs. It's just we have a process. Or maybe like cornflakes, we have an assembly line that runs, and we may turn it off. Maybe we only run it 10 hours a day, but is there a specific job that I can track costs by? And no, we've been making cornflakes for 50 years, and we may have changed the box design a little bit and maybe changed the formula a little bit, but there's no specific job. It's a process, and raw materials come in one end and the finished product comes out the other end, and it's actually a process. So we can't really assign costs to specific jobs in a process system, because there is no specific job. It's a process. So now we're going to talk about process costing in the next chapter, in chapter 16. In this chapter, we're going to talk about job order costing, where we actually have a specific job in which to assign costs to. So we've got to design some sort of a cost accounting system to capture those costs, to capture the costs of the specific jobs that we're going to be doing. They give an example here of job order costing. In job order costing, they are custom orders, like a pool manufacturer, pool installer. Every job's a little bit different. They're heterogeneous, which means they're different. Usually we have a very low volume, a very low number of jobs that we track costs by. But we are going to track costs by job. Compare that to process costing, where it's a repetitive process. Here they're bottled waters. They're all the same. We kick out a whole bunch of them, and things are highly standardized. So we'll talk about that in chapter 16. We'll come back to this. Maybe this gives me a headache to look at. So cost flows. Now cost flows. The costs will flow through the work in process account to finished goods to sit on the shelf until it's sold, just like the diagram that I showed a little bit earlier. Now, in a job cost system, I'm going to go back to that diagram. In a job cost system, we're going to purchase raw materials. We're going to stock this place, the raw materials. We're just buying it, putting it in there, nice and quiet. And then, as in a pool manufacturer, it's probably, these raw materials are probably tile and cement, piping. What else would be in there? What else goes into a pool? Caulking, rocks, maybe if you're putting in waterfalls and things. So it's the raw materials that will go into future pools. And then when we start a new job, when we get a job order, a customer comes in and says, "Oh yeah, I want to you to install a pool at my house." Well, then we've got a new job going now. In a pool, the work in process isn't in the factory; it's actually located at people's houses. That's kind of where the work in process is, isn't it? Because we don't build the pool here and then take it and install it. That's the work in process. Physically is at people's houses. But we may think of maybe what we're doing is we make custom dune buggies, and we make them right here, and our raw material is made up of various things that go into making dune buggies. So the work in process is located in the factory. And so what we're going to do is we're going to go get raw materials when we start a job. We're going to go get raw materials, bring it out here, and start building that thing. We're going to employ labor, and so labor costs are going to come in, and we're going to have to allocate. We're going to have to charge every job with a specific portion of factory overhead. So how do I track that? Well, in a job order cost system, we are going to track the costs by job. So think of it this way. Think of it that every time we get a new job of some kind, we are going to open a job cost sheet. And a job cost sheet looks like, it's really just, think of it as like a clipboard. And every job cost sheet, we're going to have some pre-printed forms that have the direct materials, the direct labor, and the factory overhead on them. And we may have a stack of these blank sheets. And I'm just going to create a couple more. And I do want to keep track of the cost of every single job we're working on. And every single job is going to be made up of direct materials, direct labor, and factory overhead. So a customer comes in and says, "Yeah, I want you to produce whatever it is that we produce, whether it be wedding cakes or just whatever it is." We're going to open a job cost sheet, and somehow we're going to identify the job. In a pool installation, we'll probably put the address. Maybe that's how we identify the job. Maybe it's the last name of a customer, and maybe we do so many jobs that we actually assign job numbers. But when I start a job, the first thing I want to do is open a job cost sheet to accumulate the costs for that particular job. So, and I think of this, for me, I just think of it as like a clipboard. I have a bunch of clipboards hanging on a wall, and when I start a new job, I grab a blank job cost sheet and put the title on the job cost sheet, and put the clipboard on the wall, because those are all all those clipboards that are hanging on the wall represent my work in process, and they're just accumulating the costs. So this work in process, whatever's in this work in process account, it is supported by job cost sheets. So going back to the text. Now, a job cost sheet looks something like this. Here they talk about what a job cost sheet is. And here's kind of what it is. We have a job cost sheet which tracks all the costs for each job. So here's the customer name. What else do they have? The customer's address, what the description is. This happens to be an alarm company, so they want a level 1 alarm system. Some dates, when it was promised, when it started, when we want it completed by. They assign some job number. They assign a job number to this particular to every job. And as we work on the job, as we complete whatever it is that we're doing, we're going to track materials that went into that job, coming out of raw materials, of course. We're going to track the labor, direct labor, the cost of people that I had to hire to work on the job, and then we're going to charge it with some overhead. So we'll think about we'll talk about that in the last part of the chapter. But every job is going to cost some money in materials, it's going to cost labor, and we're going to have to charge it with some overhead. And when it's all said and done, and the job is complete, we will have a record here of what that job cost. We have one of these for every single job. So we've got to set up a system of some way, somehow, some kind, to track the direct materials and the direct labor and the overhead. Oh, linking, okay, we'll come back to that. So now, recognizing that I need to track all the materials, labor, and overhead in every single job, just how are we going to do that? Well, let's start with material costs. Going back to our diagram real quick. Concentrating just on this area right here, just on the raw materials and actually the buying and using of raw materials. How am I going to track that? How am I going to, as an accountant, what am I going to do? Well, recognize that raw materials, that we are going to purchase it, and it's going to go into the raw materials inventory, and then periodically we're going to go get raw materials and apply them to specific jobs. So I have really two different transactions or two different material flows. Got to buying it and then using it. So how am I going to track these materials? They are when I purchase materials. That's going to just be from some sort of we're going to need to establish a system where maybe somebody's in charge of this raw materials inventory, and when they see an item getting low, they're going to order more. Hey, we're getting low on concrete, or we're getting low on wood, so they're going to purchase some more. So we're going to order it however it is, whatever authorizations are required in my particular company. Really, from my point of view, it's just, as an accountant, I need to know when we purchase raw materials, not only because I need to pay for it, but I want to know when it comes in. So when I buy raw materials, the purchase of raw materials, I'm going to need to make a journal entry. And that journal entry is probably going to come from purchase invoices. And that journal entry is going to be what? I'm going to debit raw materials for whatever amount I purchase it for. And what am I going to credit? Remember back to 4A, what do I credit when I purchase raw materials? It's usually accounts payable. Yeah, I'll pay for it later. So, so the raw materials, I think we need to learn about 10 different entries. And this is the first one. This is kind of where it starts. You really can't do anything until you get some material to start with. Think about building a table. Well, how are you going to build a table? The very first thing you're going to do is go to raw materials and get some wood and bring it out here and start building it. Well, before you can get the materials from raw materials, you got to buy the materials. So number one, we're throughout the month, I'm going to be seeing where in the production facility they're going to be buying and restocking the raw materials, and that's this entry right here. Debit raw materials, increase raw materials, credit accounts payable. Now I don't have the accounts payable on here, but it'll be on the general ledger as well. And then periodically, the people that are out here in work in process, as they're working on jobs, they're going to need materials, especially when they first start a job. They're going to need to go get some materials, and then periodically they may need to go back. Okay, now we got to go back and get some varnish. We got to go back and get maybe the packaging that we're going to put it in. But periodically they're going to need to go get raw materials to continue working on the job. That's this right here, is the using of raw materials, taking it out of raw materials and using it on a particular job. Now, we're going to track that by way of what? This is going to be, these are going to be material requisition slips. people just don't have access. Employees are not going to just have access to the raw materials. They just go get things and bring it out here. Somebody's going to be in charge of this raw materials. And if somebody comes over and says, okay, I need I need some more wood and some more glue for this job, this person is held accountable. Whoever's in charge of the raw materials is responsible for for what happens to this material. So they're going to need a requisition. It's called a material requisition slip. What do you need it for there, bud? Well, I'm working on job number 105, and I need some more material. So we're going to fill out a material requisition slip to show that, okay, well, we're taking some materials out of raw materials and we're putting it over here to work in process, and we're going to charge it to a specific job. The accounting department gets that information from these material requisition slips. And what do those kind of look like? A material requisition slip looks like this. This is when somebody's working on a job and they need more materials, they're going to fill out this. It's going to say what job these materials are going to, what the material is, what the date is, how many they need, and it's requested by a particular person, and then somebody's going to approve it. As to who got it, and so then a copy of this is going to go up to the accounting department, where the accounting department is going to they will be made aware of the fact that, hey, somebody went and got some material out of raw materials and is using it on a job, so we need to make a journal entry. We need to transfer that cost out of raw materials and to work in process. And that's going to look like this. We are physically taking raw materials out, or materials out of the raw materials, and applying it to a particular job. I want my general ledger to reflect that. So I'm going to need to make an entry to debit work in process, increase the costs that are in work in process, and decrease raw materials. Like every other asset account, we decrease it with a credit. We're going to credit raw materials. So these are the first two journal entries that we need to really understand, is that we are purchasing raw materials and stocking the raw materials inventory. So as an accountant, I need to be made aware of when that takes place, and that's usually through material invoices, purchase invoices. So I can show that, yes, we are increasing raw materials, and I'm also showing that I owe somebody some money for that. And then periodically, I'm going to be made aware of the fact that material requisitions were made, and those requisitions were documented on material requisition slips, so I can actually transfer the cost out of raw materials to work in process. Because physically, it's no longer, those materials are no longer in raw materials, they have been assigned to a job. Now, whenever I do take materials out of raw materials and assign it to a job, I also need to charge it to the job cost sheet, whatever job it is. So physically, if I just say, oh, we went and got $1,000 of materials and it went into work in process, well, what job did you apply that to? Well, that went to job 105. Well, 105 now just cost $1,000 in materials. We need to add that $1,000 to the work in process, to their job cost sheet. These job cost sheets support the detail of work in process. Anytime I add a cost to work in process, I need to add it to the job cost sheets. Now, this may be done on a daily basis. If we're on a computer system, the material requisition may be done immediately, or I may wait till the end of the month and just get a stack of these requisition slips and make the entry all at one time. And that's kind of what they showed in the textbook, like this. Here they accumulate them in the book by the week. So rather than processing every single material requisition, they just accumulate them for the week, and maybe on Friday the raw material guy, manager of the raw material, sends all the requisitions up to the accounting department, and the the raw material guy looks at it, or the accounting department says, well, for the week, there were 1, 2, 3, 4, 5 different requisitions totaling $1,800 that went out of raw materials and went to jobs. So we make the journal entry to transfer $1,800 out of raw materials and charge it to work in process. We'll get back to this bottom part in a little bit. So that's what, and so it may be done on a daily basis, weekly basis, monthly basis, but it's somehow, some way, we've got to track raw materials being used on specific jobs so I can charge those specific jobs, because I want to track costs by job. Here they kind of show what I did a little bit on mine was just in a little bit more detail. In this particular case, they bought $27.50. Well, for this week period of time, I think it's a week. They started off with raw materials at $1,000 of raw materials, and during the week, they actually purchased another $27.50 of raw materials just to restock it. So they made this journal entry, debited raw materials inventory $27.50, credited accounts payable, just like we said. That added to the raw materials here, $27.50. And then during the week, they showed that direct material requisition slips showed that $1,800 was used, went to specific jobs. So we made this journal entry showing that $1,800 cost of materials went to work in process. So we made an entry to debit work in process and reduce credit raw materials. And because we're adding to work in process, we need to add it to the jobs. And that $1,800 went to these 5 jobs. So we added those material costs to their job cost sheets, just to show that and these just think of this as clipboards. These are probably the first costs of these jobs. So we are in fact tracking materials being purchased and materials being used in these 2 types of journal entries. Buying raw materials and showing that I have to pay for them, and then using raw materials, taking them out of the raw materials inventory and adding them to jobs. So that's the first 2 entries we're going to be looking at for materials. Buying materials and using materials on jobs. Add it to work in process, add it to a job cost sheet. Now let's talk about labor. Remember, physically, what we're going to do, the first thing we're going to do is go get materials and take it out into the production area. Then we're going to have employees that are actually going to transform or convert that pile of wood or pile of concrete or stucco or whatever it is, convert it into a finished product, and that's going to cost money. So how do I track the labor costs? Well, now labor is a little bit easier because we cannot inventory labor. It's not like this where I stock up on labor and then I use it. It's just used. Time is something you cannot inventory. So now imagine, as you will, that as employees work throughout a period of time, they're going to be clocking in on time cards or time tickets or somehow, some way, and they're going to be keeping track of their time. Now, employees are going to have to somehow let the accounting department know where they spent their time. So in an 8-hour day, they might have spent 5 hours on one job and a couple hours on another job, and then an hour on break or cleaning up or washing up or something. So their time spent on a specific job is a direct cost of that job. That is a direct cost. So when I'm looking at a job from the other perspective, when I'm looking at a job, I want to know what employees spent time working on that job and what did that cost me. That's direct labor. That's direct labor. Well, what about the time employees spend cleaning up and not working on any particular job? Well, remember, that's indirect labor. That's factory overhead. So we're trying to capture through the time system somehow that through these time tickets that somebody's going to need to break down what I paid to employees, and based on the information the employee provides as to what they were doing and which jobs they were working on, we need to break that total payroll down into direct labor, that labor cost that can be tracked directly to jobs, and then indirect labor. And indirect labor will include, of course, the janitors and security guard and the supervisors and that kind of thing. But there's going to be direct labor, their time spent specifically on jobs, and indirect labor, which is part of factory overhead. So you can see, wow, the accounting function of a manufacturer just becomes more complex by a factor, an exponential factor, because as a just a retailer, I would just be buying inventory and selling it. I don't have to track labor and where my employees spent their time. But as a manufacturer, I need my employees to tell me which jobs did you work on for how long, so I can appropriately charge those costs. So they kind of show what a time ticket is, and every company's time ticket is going to be a little bit different. But here's an example of what they would have computed as a breakdown in as far as jobs go. They said that during a specific, I guess this is for a month, they said total labor was $5,300. That's what we paid in total labor to everybody in the factory. That's everybody. And based on time cards and the capturing of the information, I can see that 4,200 of that 5,300 could be traced specifically to jobs, and 1,100 could not. So the 1,100 is part of factory overhead. We'll get to that in a little bit. But the direct portion of the total labor cost, 4,200, could be charged to those 5 jobs. 4,200. So I need to do what? I need to make a journal entry. And this is in recording the payroll. I'm going to charge work in process with that direct labor. Notice that the 4,200 is the direct labor. That's the portion of my total labor cost that I can trace specifically to jobs. So I will make this entry, charging work in process, and then showing it as a payable. In our diagram here, what we're talking about is this entry right here. As throughout the month, as employees are working on jobs, I'm going to need to keep track of their time, and I'm going to debit work in process to add the cost to the jobs that are being done, debit work in process, and then credit some kind of a payable, whether it be wages payable or factory wages payable, whatever it is. But specifically, here's the portion of the entry I'm looking for. And of course, when I charge work in process, I need to add it to the job cost sheets. I add something here, direct labor. Well, direct labor means I can trace it to jobs. We charge it to jobs. So we make this entry, debit work in process, increase work in process, which increases the cost of the jobs, credit the payable, unless payday's today, you can credit cash if you're paying it. And it looks like this. Get this a little bit smaller. And it looks like this. I'm going to debit work in process, and there's the materials from the last one. Direct labor used 4,200, credit the liability, and because I'm adding it to work in process, add it to these jobs. Job cost sheets. You can see now for every job I can see the materials used this month and the labor used this month for every single job. I want to know when the job's done, what did the job cost? What did it cost? Watch these. Let's see what it says. It's only 51 seconds. Let's see what it says.
A manufacturing company used $5,400 of direct labor in production activities in May. Of this amount, $3,100 of direct labor was used on job A1, and $2,300 of direct labor was used on job A2. Prepare the journal entry to record direct labor used. The journal entry for direct labor is a debit to work in process inventory, $5,400, and a credit to the liability account, factory wages payable. $3,100 of direct labor was charged to job A1, and $2,300 of direct labor is charged to job A2. The job sheets act as subsidiary ledgers to the control account work in process. Total direct labor charged to the job sheets will always agree with the total charge to work in process.
That was interesting. That's cool. Yeah, that's very cool. What they were talking about is at the very end there, that these are subsidiary records of the control account. What we're doing is anytime we add something to work in process, we have to add it to a job cost sheet. So at any point in time, all these job cost sheets should total up to the total. This is called a control account. It has the total of the costs in work in process, and this has the detail just broken down by job. So I add something here, I've got to add it to a job cost sheet or multiple job cost sheets, which we'll see when we do an example. Yeah, very cool. Okay, gosh, we're 2/3 of the way through this chapter already. Wow. Okay, so let's go back to our example here. So, we're tracking the costs of jobs, and again, those costs are being incurred in the work in process inventory. This is where job costs are accumulated. Not much going on in raw materials. We're just stocking it and using those materials as we're needed, but work in process is represented by various jobs, and we are accumulating costs at this level, adding it to the control account and also adding it to the detail. Now, we're going to talk about factory overhead. Factory overhead, this is probably going to be the toughest part of the chapter, is to grasp how we're going to charge factory overhead to jobs. Because now if we've got several jobs going, in my case I have 4 jobs here, and I'll say that job 105, 106, 107, and 108. Throughout a month, I am through material requisition slips, I'm going to know how much each job took, how much each job cost in direct materials, because I'll just look at the material requisition slips and it shows how much materials were taken out of raw materials and put into jobs. So recognize that's a hard cost. When I look at job 105 and I say, oh, well, during the month you went and got $1,000 of material, there's no way they can, that's not an estimate. That is a hard cost. We've got the direct material requisition slips that show that you went and got $1,000 of materials, and that was a cost of this job. The same thing with direct labor. Direct labor, we computed that from timesheets. And from the timesheets, we can say how many hours were worked on every specific job, and we can look to see how much those hours cost by how much we pay certain employees. Thank goodness for computers. They're going to help me make this determination. But these are hard costs. If job 105, if it shows that we had $2,000 of direct labor costs, and whoever's in charge of this job, if they say, oh, I didn't have $2,000 of cost, I can go back and say, yes, you did. Time cost sheets show that these 4 employees worked this number of hours, and this is what we paid these employees. This is what that job cost in direct labor, because that's what the time records show. That's what the time that was spent on it. And if nobody worked on the job, it'll have 0 direct labor costs this month. If nobody worked on it, of course. But the third cost, this is a little bit more abstract, in that the factory overhead, all the other indirect costs of the factory, all other costs, all the indirect costs of the factory for this period of time need to be charged to all the jobs I worked on during this period of time. And what are all the indirect costs of running a factory? Well, it's every single cost except direct materials and direct labor. Every other cost. So it's indirect materials. We talked about that in chapter 14. It's the materials that don't become part of a job, like going and getting propane for a forklift or sawdust for the floors to keep people from slipping. So it's indirect materials. It's the indirect labor, all labor costs of employees working here that cannot be traced to specific jobs, like supervisors and security and janitors and employees' breaks, things like that, and every other cost, the rent of the factory, the property taxes, the insurance, the coffee in the break room, fixing a window when it's broken, cleaning the parking lot, repainting the building, everything, every other cost of the factory, because these are product costs. And even though, I mean, we may think, okay, well, I went and bought, what could I have bought? I could have, let's say we went and bought coffee, coffee for the break room. Well, how does coffee, is that coffee for the break room? Is that a cost of manufacturing these 4 pools? These 4 swimming pools that I was working on this month? And the answer indirectly is yes, it is. I mean, you can't go to the pool and see the coffee there, but if I did not manufacture pools, I would not have had a need to put coffee in the break room. So, well, that's a cost of manufacturing pools. It's an indirect cost. It's an overhead cost. So I need to accumulate all of those costs and then charge them to all the jobs I worked on. So it's almost like a bucket, factory overhead, and I'm going to put a factory overhead account down here. Factory overhead is like a bucket, and what I'm going to do is that as I go get direct materials that specifically are traceable to jobs, yeah, I'll transfer those material costs right to work in process and charge it to the job. The indirect materials, well, the indirect materials are going to have to be thrown into this bucket, indirect materials. We'll charge it to factory overhead. Direct labor, the cost of the labor of those individuals that are working specifically on jobs, yes, we'll charge it right to work in process and charge it to the jobs. How about the indirect labor? Oh, well, can't charge it directly to jobs, so, well, that's another indirect cost, indirect labor. And then what about all the other costs? And there's going to be a lot of them. I'll just throw a few. The factory rent, the factory utilities, the factory supplies, the factory insurance, the factory repairs. There's a lot of them. There are going to be a lot of them. So what we're going to do is we're going to accumulate them here until we get to what they were for the month. What they were for the month. And then we're going to take this total and we're going to charge it to the jobs. We're actually going to transfer it up here and we're going to charge it. So we're just going to put it in this bucket, let the bucket fill, and then we'll transfer the total amount to work in process and then allocate it. It gets allocated to all the jobs I worked on. Allocated to all the jobs I worked on. So it is. All of these costs are going to be charged to jobs, but they aren't directly traceable to jobs. So what I need to do is keep track of the total and then periodically splash them on the jobs, allocate them to the jobs. So these are not hard costs. These are estimated costs. The direct materials and the direct labor in jobs, those are hard costs. I can say, yes, this job took this much in materials and it took this much in labor. And then I had to just estimate a certain amount of the factory costs here, a certain amount of these factory costs, and threw them on that job and charged it that way. Okay, let's pull this all together by way of an example. And I'm just going to make up an example as I go that to help illustrate this, because I think most of us are visual learners. Okay, raw materials, work in process, finished goods. all inventory accounts, all assets, all have debit balances. Okay, so now I'm going to say that we're going to start on 1/1, January 1st, and we have zero work in process. There was nothing out there on the production floor, so there's zero cost in it. And that could be the case if we're like a cookie manufacturer or something. We don't have any half-made cookies at the end of the day. They're either done or not, but zero. I'm going to say we started off with $2,000 of raw materials, and maybe we have $6,000 of finished goods. That's what it cost me. That's sitting on the shelf in the showroom, $6,000. And I have $2,000 of raw materials, my cost, in the raw materials inventory. Now, I don't have any jobs going, so I don't have any job cost sheets. So, I know that now, during the month, as an accountant, I'm made aware of this, that we actually started 3 jobs. So, we opened up 3 job cost sheets. And those jobs were A1, B2, and guess what? C3. Yeah, just however we identify jobs, however we do it. And on these job cost sheets, we're going to keep track of the direct materials that were used on each job, the direct labor used on each job, as well as the factory overhead that we're going to charge each job, just by virtue of it being here during the month. So, now, the first thing I know, I'm going to put a factory overhead here as well. And factory overhead generally has a debit balance because it represents a cost, just like raw materials. Raw materials go in and then they get charged out. Factory overhead goes in and then it gets charged out. Okay. Now, so hopefully you're good so far with this. Now, during the month of January, certain things took place, certain events took place. One, I know that I purchased raw materials. During the month, raw materials were being used, and so I purchased certain raw materials. So, and so I'm going to put purchase raw materials, and I purchased, I'm going to say $10,000. I ordered $10,000 of various materials to restock this. What would the journal entry be? And that's what this chapter is all about, is introducing the journal entries that we would actually use. Let me get this over here. Sometimes I don't realize I'm off the camera. There we go. What would the entry be? Well, I would debit raw materials for $10,000 and credit accounts payable for $10,000. So yeah, during the month of January, purchase invoices show that I added $10,000 to raw materials. Now, of course, I'm going to have to pay for them, and we're not going to get into this entry, but for those of you that are thinking, well, how about when I paid this? 30 days later when I pay that $10,000? Well, you would debit accounts payable and credit cash for $10,000. But that's not the entry we're really concerned with right now. We're concerned with tracking the costs. So, we have purchased raw materials. Debit raw materials, credit accounts payable. And I'm abbreviating just so it doesn't look quite as busy. Okay, so now, second, as an accountant, I need to be made aware that there was $12,000 of raw materials here, but I know that raw materials were actually requisitioned out of here. Raw material requisitions, and based on the raw material requisitions, and I'm just going to say that there were a lot of them, and I just, I'm made aware of them. We summarize these, and the raw materials that went out of here, there was a grand total of, I'm going to say, $9,500 in raw materials were taken out of here. $9,500. And so we analyzed this. We broke these down and found that job A1 took 4,000. Job B2 took 2,000. C3 was started right at the end of the month, only took 500. And then indirect, I mean, so these are materials that didn't go to any particular job. They were like cleaning solvents and maybe grease for the machines, propane, things like that. What would that be? 65. That's 3,000. So all I did was I broke down this $9,500 that was taken out of raw materials. Of course, that would have left a balance of what, 2,500 on 131. That's okay. This $9,500 was taken out. This is direct materials. 6,500 of it went directly to jobs. The other 3,000 went to was used for indirectly, which by definition is factory overhead. But this 6,500, the direct materials used, I want to debit work in process for the 6,500 and credit raw materials. I should break this down to 6,500 was direct materials, 3,000 was indirect, and we'll get to that. That's got to go down to factory overhead, but for right now we're just talking about the direct materials used. The 6,500 that was used. So we're going to make this entry. I want to increase work in process for the 6,500 and take that 6,500 direct materials out of work in process. With that entry, oh, I'm sorry, I was off the page again. So the direct materials used, debit work in process for 6,500, credit raw materials for 6,500. Now, I added 6,500 to work in process. I need to add it to these jobs. This 6,500, what jobs did it go to? Well, it's right there. 4,000 went to A1, 2,000 went to B2, and 500 went to C3. Now notice these jobs, the costs of these jobs all add up to 6,500, and that's what the balance of this account is. Now second, well, let's go ahead and do this one. Third, we haven't seen the entry yet, but we're going to get to it on the next video. This is the indirect materials used, coming from the job cost sheets. So this is first entry. This is, this is the second entry. This will be the third entry. I want to reflect the fact that we took some materials out of raw materials and it went to factory overhead. So we're going to debit factory overhead for 3,000 and credit raw materials for 3,000. Indirect materials, $3,000. Debit factory overhead, credit raw materials. And that's what this is. Debit factory overhead, credit raw materials. So we're just showing that materials were taken out of the raw materials inventory and it was indirect. Couldn't trace it any particular job, so it cannot go to work in process yet. It's got to go into the indirect costs. So that pretty much takes care of the entries for acquiring and using materials. We buy materials. Whoops. We buy materials. There's the entry. Some of them are used directly on jobs. There's the entry. And some of them are used not directly on jobs. They're used indirectly. And there's the entry. Now, let's talk about labor. Now, these are for materials. Now let's talk about labor. During the month, labor, we gathered all the time cards, and we broke it down, and we analyzed all the time cards, and we see that the total cost of labor this month was, I'm going to say, $10,000. And we analyzed it, and we found that we could trace, let's call it $3,000 directly to job A1, $2,500 directly to B2, and $1,000 directly to B3, and then the indirect portion, supervisors, downtime, rest periods, security guards, indirect labor amounted to the rest, which is what? Well, let me see, this is $3,000, $5,500, $6,500, $3,500. Now recognize this is direct labor. That's direct labor, which is 65, oh gosh, did I do the same thing? I guess I did the same 65, and it's the same amount. I didn't mean to do that, but it works out that way. Sometimes it happens. So it's not this 6,500. It's a different 6,500. But direct labor was 6,500. So I need to record direct labor being used. That comes right from here. What's the entry to record direct labor incurred? Well, I need to debit work in process for the 6,500 direct labor and credit, a labor payable, payroll payable, something. And it's not really this portion of the entry I'm concerned with, but every entry's got a balance, debit and credit. So I'm charging work in process with direct labor, crediting the liability, and since I added something to work in process, I need to add it to the job cost sheet. So which jobs was this 6,500 for? Well, it was A1 up here was 3,000. B2 was 2,500. And C3 was 1,000. So now the balance of work in process is 13,000. What do these cards all add up to? Well, this one is 7,000. This is 4,500, and this is 1,500. It's 13,000. Just the job order cost sheets are keeping the detail of the total work in process by job. Actually supports that account. What about the indirect portion? Got to pay that 3,500 as well. Well, the indirect labor looks much like indirect materials. We're just going to throw that down here into factory overhead. Indirect labor, 3,500. We're going to debit factory overhead for 3,500. Throw it in there, 3,500. And credit, same thing, labor payable. I got to pay 10,000 in labor. 6,500 was directly charged to jobs. 3,500 was factory overhead. Then I'm also going to make a lot of journal entries for other indirect costs that are taking place. Like, okay, I had to pay the rent. That was $5,000. I had to pay the utilities. That was $2,000. I had to pay the insurance. That was $500. I had to buy supplies. That was $1,000. I had to pay property taxes. Oh, there's just, it can go on and on. That was $1,500. And so we may get down to, after recording all these other expenses of running a factory, it may come up with $20,000, total of $20,000 for the month. Those are all the indirect costs of running my factory, including indirect labor and indirect materials. Now this $20,000, once I find out what it is for the month, I'm then going to transfer it. I'm going to charge it to work in process, which is going to require me to charge it to these jobs. Again, that there's only 3 product costs of manufacturing a product. There's direct materials, there's direct labor, and there's factory overhead, all indirect costs. Direct materials is a hard cost. It comes right from direct material requisition slips. And I know that these jobs cost this much in materials. I'm tracking that. Direct labor is a hard cost. I know that these jobs cost this in direct labor. I'm tracking it on time cards. But factory overhead, the factory overhead for this month was $20,000, kept track of it. $20,000, then transferred the whole amount, just charged it to work in process. Now I need to charge it to jobs. And this is where the last part of this chapter comes into play, is how do I charge factory overhead to jobs? We're right at an hour right now, so I'm going to stop this video, and then I'm going to do another one to pick up where we left off.